So, three companies in the semiconductor market reported earnings this week that deal with the manufacturing aspect. Either they provide the equipment or the actual manufacturing solutions. The three companies are ASML, Taiwan Semiconductor, and Lam Research. On today's episode, what I want to do is take a closer look at these three semiconductor giants and kind of see which one do I believe is a better buy for me in the long term of things. I do want to say I am a shareholder of Taiwan Semiconductor Manufacturing, but the one I'm willing to purchase at these levels might surprise you. Let's take a closer look in today's episode. So first, I just want to take a closer look at the price of 5-year highs. All these companies have followed the same kind of trend. We can see that the two companies dealing in the equipment manufacturing, ASML and Lam Research, are down roughly the same percent, around that 28% from their all-time high, from the 5-year high. Taiwan Semiconductor Manufacturing is down a bit more, down roughly 36 to 37% as I am recording. But we can see all these companies are pretty much follow the same trend in the overall semiconductor space. Now I want to take a closer look at year to date. We can see similar results. Lam Research is up a little bit more after the company reported earnings. Even though earnings have been bad for all players, their kind of guidance or outlook for maybe not the next quarter, but future quarters is giving some more confidence to investors. So we can see Lam Research is up roughly 25% year to date, but all these companies are up between 15 to 25%. Nothing too crazy. So now let's take a closer look at what we're seeing here in the earnings. Let's just look at their revenue breakdown and some of the kind of highlights that they told us during the earnings call. So let's start off with ASML. This is the company that provides lithography machines. And if you want to learn more about the semiconductor market, make sure to join the membership. You should see a join something over here on YouTube, where I kind of do 101s on all these great semiconductor companies. And in the future, I'll be doing more deep dives. It's a great membership if you want to learn more about the semiconductor space. My first one was on ASML, so make sure to check that out.
Finally, I want to thank The Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for the subscription service. Now, let's continue with today's episode.
But we can see ASML, most of their revenue comes from lithography machines, which is this super amazing machine needed to manufacture small chips and all types of semiconductors. We can see their memory end use is usually in the logic market, but the memory market is also important for them. Unfortunately, one scary thing for ASML is their net bookings, this is future sales, was up only 3.7 in the most recent quarter. So this is a lot weaker than normal, and a lot of investors are fearful that their backlog is weakening. At the same time, ASML mentioned that, hey, we still have roughly 39 billion euros in backlog. That's enough for this full year, and in theory, at least for the first half of next year. So they don't really have to work too much to really have a strong sales this year, because they're already fully booked to capacity. Lam Research, we can see this is a company that unfortunately revenue depends a little bit more on the memory side. Lam Research creates manufacturing equipment that goes on the memory market. Right now, the memory market is extremely weak. Let's take a closer look. I do believe they mention it in this earnings report. Here we can see that they believe calendar year 2023 wafer fabrication equipment to be in the mid to low 70 billions versus last year, which was roughly mid 90 billion. So they expect memory spending down approximately 50%. So we can see their market is a little bit weaker right now. They did kind of showcase, and they did show their revenue that, hey, it's down roughly 26% quarter over quarter. We're seeing that weakness here. But at the end of the day, management it believes that, hey, even though there is weakness here, they are investing in long-term technology. And they do mention that the current memory spending is unsustainable to support the long-term NAND and DRAM bit demand growth. So they're saying, hey, right now our customers are not spending too much on equipment, but they can't do that forever because the demand for memory is going to increase dramatically, that they need to go back to purchasing our equipments very, very soon. So that's one of the main reasons the company had a nice, I believe, 7 to 8% run up after earnings. Now, if we take a closer look at the company that manufactures chips, unfortunately, quarter over quarter revenues were bad. They saw weakness all around the maps, from high performance computing to smartphones to Internet of Things. The only one that really saw some strength was the automotive market, but that's still such a small portion of this company's total revenue. They also kind of gave us that, hey, revenue quarter over quarter was down roughly 16% on US dollar basis, and year over year is down almost 5%. So there is some weakness here. Luckily, we did hear from management that, hey, the first half of 2023 is going to be weak. They expect second quarter of 2023 to actually be weaker than this. But then the second half of 2023 is where they're going to start to see some growth. So they do believe to some extent the bottom is going to be the next quarter. So obviously, things are looking bad for at least the next quarter for a lot of these companies, but there is some light at the end of the tunnel. Now, I want to say all these companies are dealing in the manufacturing aspect of semiconductors, either being equipment or the actual process. And one of the major tailwinds are things like the United Chips Act, which is going to bring $52 billion for semiconductor manufacturing incentives. Obviously, these three players are ones that can benefit from there. I personally enjoy more the equipment side. We also saw that Europe also came up with their own subsidy plan for chip making, and theirs is roughly 43 billion euros. I believe that equates to about 47 billion dollars. So a nice $47 billion to be exact here, we can see from this article. So we see that there is going to be a nice amount of tailwind and spending being used on equipment and manufacturing. So all these players can definitely benefit. Now, which one would I purchase at these levels? So I wanted to take a closer look at EV to EBITDA ratios and kind of compare the forward ratios to historical levels as well. I personally do believe that ASML, that all three of them are kind of trading at below average. The ones that really do attract me the most right now are the equipment side. And we can see ASML forward is roughly 23.5. It seems to be below its average for the past 5 years. Taiwan Semiconductor forward is roughly 8.6. Below, it does seem like the past 5-year average. And Lam Research are roughly 12 at the moment, which is below the 5-year average. So overall, valuations, just like we see in the market, are lower than the average. So I think that's great. So before I make my decision, one final thing I wanted to take a closer look is to see how these companies have historically performed against a semiconductor ETF, right? Because I do believe the semiconductor market is going to outperform the overall market. And here we can see, let me just add S&P 500 here. We can see in the past 5 years, all these companies have outperformed the S&P 500, even the VanEck Semiconductor ETF. So for me, I don't believe that's going to change. I do believe all the semiconductor industry will continue to outperform the overall market. So now I want to see, hey, are you going to be a semiconductor follower? Are you just going to follow the semiconductor ETF, or are you going to outperform? In the past 5 years, only out of the three, only two have outperformed the semiconductor ETF, and these are the two equipment companies, ASML and Lam Research. We can see Taiwan Semiconductor has actually underperformed against the semiconductor ETF, and I think there is a probability that's gonna continue for the next 5 years. So for me, even though I do have a position in TSMC, I think instead of investing in TSMC, I have better risk to reward management if I did a semiconductor ETF instead. But when I look at ASML and Lam Research, especially with all these kind of nice tailwinds coming from subsidies in Europe, in the United States, the semiconductor equipment companies like ASML and like Lam Research are ones that can continue to outperform the semiconductor market and continue to outperform the overall market as well. So for me, I don't know who to choose between ASML and Lam Research, but I think between the three, those two are my favorite plays at the moment. Let me know in the comments below, what do you guys think? Do you prefer one or the other, or do you actually prefer TSMC, even though this seems to be more of a just like a semiconductor market follower opposed to a semiconductor market outperformer? Take care, have a good day, and see you next time.